welcome. You're watching Money9, India's first multilingual platform for personal finance from TV9 News Network. I'm Sakshi Batra. Well, over the past few years, there has been an increasing discussion about financial inclusion. And now financial inclusion goes beyond banking the unbanked. It means providing every citizen the knowledge and the tools that will help them save, invest, and grow their money to live their life goals. And fintech companies clearly in this journey are becoming key catalysts for the same. On Kaise Bachaye, Kaise Badhaye, we catch up with entrepreneurs in the fintech space that are doing just that, which is helping you save and to grow your money. Joining in today with me is a very special guest. Mr. Mahesh Shukla joins in. He's the founder of PayMe India, which is a fintech lending app. Thank you very much, sir, for joining in. It's a pleasure to have you with us on Money9.
Thank you, Lakshmi.
Well, let me just begin by understanding from you, Mr. Shukla, that to help us explain what your company really does. Now, we do know that a lot of us apply for personal loans, but salary loans specifically is a relatively new concept. So help us understand the whole concept. And you, launching this company about 5 years back, what was your whole idea behind it? And so far, how has your journey been?
Okay, I think if you talk about personal loan or salary loan, there is nothing new. But yeah, the kind of product which we are offering to bridge the gap, this is a different kind of loan. It's a slightly smaller loan for a smaller period of time, wherein a person can borrow for their emergencies and pay us back in one go. So earlier, the salary loan was only linked to a personal loan, wherein a person can borrow and pay in EMIs for years and years. So yes, if you compare both the product, this is a slightly new concept. But yeah, now it's been almost 3 to 4 years that the market is aware of this product, and this product has got a good traction over the period. In fact, this is being seen as one of the replacement for the personal loan products, and people are more comfortable with that kind of product.
Okay.
About my journey, so I've been a banker throughout my life. I was working with a leading banking firm, and I was looking after the fintech research over there. And I got to learn a lot about the fintech space from there. While studying the Indian infra and the kind of ecology which is being developed over here, the startup system and all. And that was an era when Geo was in thoughts, like Geo was supposed to come in India, bringing the high bandwidth of network and everything. So I realized that the whole structure or infrastructure is being changed, and this is the right time wherein complete digital lending platform can help for the Indian consumers to borrow easily and basically manage their finance wisely. So that was the time which this idea clicked into my mind, and I decided to quit my job and started with this my venture.
Okay. Help us understand the process of applying loans from your company. How easy is it, and what are the kind of rates of interest that you offer on these loans?
Okay, so we are a complete digital lending platform. So if a cognizant customer is onboarding us, so probably within 10 minutes he can get his or her first loan from us. So this is basically a complete eKYC process which we complete via our mobile app. Then the customer needs to provide any of their income proof, and we have a data science back team who has developed a model basis which we evaluate customers' eligibility and pops up the loan eligibility instantly. So there is a process called 3-2-1. So we take 3 minutes in onboarding, 2 minutes in underwriting, and within 1 minute the loan gets disbursed. The ROI, which is the right question, so we are charging around 0.1% per day, which is far lesser than a credit card. And that is where we see that the customers are more interested in this product.
All right. And also looking at the kind of plagues that industry has with regards to bad debts and, what kind of credit worthiness are you really looking at when you give your loans to these customers, borrowers, and how do you really handle defaults?
So basically, when we underwrite our customers, so it's just the journey or the way of underwriting has changed. There is no ease on the parameters, I would say. So if there is a bad customer, the chances are very negligible that he would get a loan from us. But yeah, good customers, the profit is that yes, they can instantly get a loan from us. So we also check various parameters, which is inclusive of your income, your KYC docs, and the inputs from your bureau. We also have this leverage of using your mobile data. So like we can get your pattern, so from which location you are onboarding, and what kind of activities you are doing. How, I mean, there is a lot which we try to understand from your alternative data. So that all input also gets added into the underwriting processes, and it will become very easier for us to understand and probably trust the customer.
And do you think that there is a kind of hesitancy with respect to borrowers sharing this kind of data with you, because we are continuously hearing about data breaches and all of those. So is that a worry among your borrowers at all?
When a borrower onboards and reads about the terms and condition, and if he is cognizant enough to understand what kind of data is he sharing and for what purpose is he sharing, then there is no confusion or no questions asked. And we always encourage our borrowers to read the policies and the documents in detail so that they can understand. So if in case someone is permitting camera through mobile, I mean, letting us access their camera, so basically, it is just to do their KYC quickly, like
Hmm.
take their selfies, take their photo of their documents. It's not that we would want to enter into their galleries, right? So now that is why the whole definition is given on the app, that for what purpose, what access is being asked. That makes the borrowers more comfortable. So my borrower is happy sharing the data with us.
Okay. Also, in the end, I wanted to understand, there's a very peculiar situation that we have in our country wherein whenever the need for finances or loans arises, most people are still looking at loans, taking loans from their friends or relatives. And then there are these kitties and committees that go on, have a huge penetration when you compare it with the banks and official financial institutions. So, help us understand your take on how companies such as yours, these new age digital fintech companies, really fitting in to bridge this gap, and what are the key reasons, and how will this really change this habit?
Yes, so you asked the very right question. So here around 300 million customers in India, basically they are borrowing through their friends, relatives, because they are not the one which are getting entertained by the banks or probably the traditional lenders. When they go to a Lalaji shop or probably to a pawn shop, they end up paying high charges, and even that loan is not creating any kind of history for them. That is where we are creating the cognizance amongst our customer, that what are the benefits of borrowing from a regulated lender. Like when you
Hmm.
borrow from a regulated lender, this gets reported to bureaus and you are creating a credit history for yourself. So over the period, say suppose 5 years down the line, if you're looking forward for a bigger loan, maybe you are looking it for an education loan or a housing loan, then you have an existing credit history which helps you in borrowing at a very affordable cost. Without existence of credit history, none of the banking or financial institution would support you a loan in long run.
Hmm.
And if you will continue to borrow from these pawn shops or your friends and family, there is no such history being created. So that's the
Hmm.
biggest challenge. So that is why we encourage people to borrow from regulated lenders only, and that too from RBI approved NBFCs.
Okay. I also had this one last question. Since you just said that, your company focuses more on millennials, more millennials are taking loans from you. Now, whenever because we talk a lot about personal finance on Money Nine, and we are talking about, expanding financial inclusion to include all 130 crore people. And we are aiming towards, spreading the education and financial literacy through our platform as well. I wanted to understand that, a lot of financial advisors do tell us that increasingly, with the easy availability of finances, a lot of millennials are getting into this debt trap. They're kind of taking easy loans to maintain a lifestyle, get expensive phones or clothes, maybe go to a vacation. So, how do you think this line can be actually not towed on the other side? Fintech companies like yours also can do a lot more than just providing easy finance to also educate. So, what kind of things are you also doing on that sphere?
Yes, so basically, when you underwrite a customer, there is a terminology cost FOIR, whereas we evaluate your fixed obligations towards your EMIs and all. And we definitely encourage our customers to keep it lower. While evaluating a customer, we do consider that factor, that we are not an aggressive lender. And we encourage them that there should not be any borrowing if it is not necessary. right? And when we underwrite a customer, we give them an advisory as well, along with the loan sanction letters and other information, that this is how you are exposed and you should continue to bring down the exposure to a limited level. Like if you are exposed 80% of your fire, then it is going to be create a difficulty in future, right? So that kind of cognizancy is very much required for the first-time borrower, or probably for the millennials, because they are not very much aware of it. And when they get access to easy finance, they exactly get trapped into it. So like if they are getting an option to buy a phone, they will buy a phone. Then another laptop, which is they are getting at an EMIs, they will buy it. So probably that the laptop is not needed at that point in time. And that is where if they are getting easy cash from other lenders and the digital lenders, so they will apply everywhere. So there is a system mechanism on place wherein we can evaluate and basically limit the customers. So that is a responsibility from the lender side as well, that when you underwrite customers, you have to be very, very vigilant around it.
Okay. And lastly, what is your vision going forward for your company? How do you see it growing forward from here? The challenges that you probably wish to overcome, and how, if you could help us understand all of that.
So we started with the one product, and then we are adding further products into our offerings. And basically, being a fintech organization, this is always our vision to be a go-to company for the customers when they are looking forward for the finances. But yes, we want to create a complete suite of products wherein we can offer our customers the kind of product which they are looking for. So they don't have to probably look around for the other companies. And maybe it could come so easy for them that, okay, they don't have to struggle. So even if they are not that much literate wherein they understand finances, uh, creating that awareness amongst them and offering them the right product at the right time, that is what our vision is as of now.
Okay, thank you very much, Mr. Shukla, for sharing your views with us about PayMe India and how it is really helping investors and people in need really get easy financing options as well. And wish you all the very best for your future. And with that, we wrap up this edition of Kaise Bachaye, Kaise Badhaye. Hope to get you a lot of more interesting stories about how fintech companies are really helping you, and in case you need to explore something in your financial independence journey as well. Thank you very much for joining in.